in many ways we can win, but we've already won militarily. They have very little. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal. That's the problem.
Just a day after declaring the Iran ceasefire over, the president is threatening more military action. President Trump says Iran called him to make a deal, but whether that regime can be trusted has become the most important question. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dave McDowell, and Brian Bremberg. With us for the hour, Endeavor PAC founder Tiffany Smiley. Great to see you. U.S. forces have struck roughly 90 Iranian military targets, with CENTCOM saying the operation was designed to protect commercial shipping through the Strait of Hormuz. Trump's warning is pure and simple. The Strait of Hormuz stays open. Target commercial shipping again, and the U.S. will hit back. For investors, this could be the beginning of diplomacy again, or a much wider conflict. The price of oil lower today, but holding above $72 a barrel. So you've got the markets picking up a little bit on this, and oil holding stable. But I'm tired of the word again when it comes to President Trump. We either can trust them or we can't trust them based on the negotiations that have played out. And I would say we can't trust them. So what are we waiting for, Dagan, before we make a bolder move to end this conflict?
The reason that I would say one of the major reasons, to reiterate something we talked about, that we entered into this deeply flawed memorandum of understanding was to help replenish energy inventories globally. And because the American people were not willing to pay $1 or $2 more a gallon for gasoline for regime change and for a true destruction of the Iranian regime. So where are we now? We're at kind of a tipping point that we have, even though that this conflict, when we were full bore, was not costing as much money as we thought it was. Initially, what were the numbers thrown out? Like $1 billion a day. Mm-hmm. It was a fraction of that. Yeah. But we have reached the limits of how much we can borrow without causing impacts to both inflation and longer-term interest rates. So this kind of unfinanced spending or deficit spending will show up in prices and interest rates. We've been doing it since 2000, but it didn't become a problem until really 2020 COVID era spending and kind of monetary blowout, 2020, 2021. So at the margin, whatever we do in terms of like unexpected deficit spending causes interest rates and inflation to run higher and hotter. And the voting people and the American people can't tolerate it and won't tolerate it. Yeah. And that's kind of the vice that the president is in.
And that is a very fine line to walk when you think about it that way. Thank you for putting it in context in that way. So, Tiffany, I come to you when it comes to the voter, midterm elections, what happens next, how people are feeling. Oil prices had dropped under 70. We were just starting to feel some relief at the pump, which everyone was happy about. But here we are again in a position where potential conflict could ratchet those prices up, impact the rates, impact inflation. I don't think that's something that the American people have appetite for. I think the president understands that. Yes. So how do you walk this tightrope?
Right, and I think the president has shown that he is incredibly frustrated with Iran. He seems very frustrated, and rightfully so. He has been negotiating with them for a while now. I think he made it clear that he first hit them militarily, and now he's not afraid to hit them on the economic side. He's willing to do whatever it takes, and I think he kind of laid that out over the last couple of days to the American people that he will see this through. America's not just going to roll over and say, we can't do this. He will deal with them and he will finish the deal. Now, what that deal looks like and how long the American people have to sort of absorb the pain of that is to be determined. But I think President Trump knows he has them in a place where he holds the cards. How long, how much military strength will it take? That's to be determined. But I think the positive side of it is that he showed confidence and resolve. And, the general election, what are we at? 4 months away now, a lot can change. And I know we keep saying that, but in terms of politics, domestic politics, that's a lifetime.
I love working with such smart people because you're making me think about something. And Brian, I'm going to kick this to you.
Oh, you shouldn't go to me next after saying that. That's a bad idea, Jackie. You know.
Is this idea that
He's just here
Tiffany
for the look.
is bringing it up? This idea that the president actually knows exactly where he stands. He's watching all the data. He's watching all the numbers. And he does still realize that he has time. Now, the interesting part of this is we don't really know what's happening in Iran because they block everybody out and there's no internet.
Right.
People can't communicate. So we don't necessarily know how bad or you know, what level of bad it is there economically for them right now. Maybe it is far worse than it's, you know, anticipated. Maybe the duration that we need to wait it out isn't that much longer.
Yeah.
Especially with Besant and these sanctions again, no selling of oil.
Well, and when you deal with people who don't care what's happening to their population, I mean, that is kind of in their favor in the negotiation. They just do not care. We care if people are paying 50 cents a gallon more for gas. They don't care if people are starving.
Right.
So that's what Trump is up against. What it seems like we're doing, and this makes some sense, because you use the word see this through. What does it mean to see this through? Some people say, well, that means kind of the definitive blow against the regime. And I don't even know what that means exactly. Some would say that's Carg Island. That would be some limited boots on the ground. I don't know. It strikes me that every time Iran is now trying to do something with the Strait, they're getting less leverage for the effort. Okay, so they struck us. They hit 3 ships. We obliterated, you know, we just pummeled them 90 targets last night. We hit some bridges, I think, as well last night. You quoted oil at the beginning of the show. When I was looking at it, it was in the 71s. Maybe it's just above 72. But that's nothing for what's happening with the Strait right now. Now, I could be, you know, that could change in a day. But what it tells me is Iran's leverage is slipping away. And so what that might mean to the president is, I don't need to take a big risk. I don't need to put boots in the ground. I don't need to do Carg Island. I can grind them down every time they lob something at us. They're not getting much for it, and we hit them back harder. To Dagan's point, that could be a budget buster. I agree with that, and that could send interest rates up. I'm going to set that aside. But it does seem to me that time is on our side here.
Okay, and this is interesting too, because Taylor, yesterday when we were looking at the markets, we had steep sell-off based on all of this.
Yeah.
Then the president's at NATO, he starts making some comments and he says the ceasefire is over, but then he gives you the inclination that he'll hit them back for retaliation purposes, but that this isn't going to be some big blow up kind of a situation, and the markets start rebounding and reversing those losses, and today they're higher.
Yep.
So what that tells me is markets do not want some huge military conflict. They want to see this play out, even if it takes maybe a little bit longer. They want to see it play out in a little bit of a safer way with the president getting what he wants.
Yes. So the market's desperate just to be able to ignore this. Desperate to be able to focus on earnings that are, I think, going to be starting next week, and the thick of it really at the end of July. Desperate to be looking at oil not at 80, but back in the 70s. And so I think you're right that they're looking for sort of a quick resolution, but a long-term resolution so we can get back to business. We talked about this sell-off yesterday. We've talked about sort of this rotation out of hardware into software. Today, software down, hardware up a little bit. So you're seeing a little bit of that. But you're not coming out of the equity market. You're just seeing this rotation within the equity market. I hope I didn't step on your toes, Dagan, because I think you mentioned hints of this yesterday. But you are still very close to record highs on the triple Qs. And yet now more than half of NASDAQ stocks are in a bear market. More than half of tech stocks are now down 20% from their last, yearly high that we have seen. And if I'm looking at my numbers correctly, almost 80% are in a correction, which means you're down 10%. Historically, when we've seen that, you see a pretty big dip, and then you get a lot of the buying activity. I haven't seen a big dip yet. You're still near that record high when you're just looking at the triple Qs. That's just like sort of an easy ETF way to look at big tech. So I think the market's trying to figure out, okay, so we need to see that big decline, because historically, when you get these big tech stocks that are in correction, in bear market territory, you would see a significant pullback in the broader index, and you haven't gotten that yet. So I think that's sort of like the worry on the horizon. I'll save some of these comments because I know we're going to be doing Pepsi and the consumer later. But Costco came out a little bit. There are reports that maybe they started to see a slowdown in June relative to May. Levi was falling this morning because they raised guidance, but it missed expectations. And there are worries about sort of that business going forward, even though analysts are still sort of very positive. You haven't?
I haven't. So I take the blame.
Oh, you're the blame.
My bad.
So again, these are one-off companies. I think the market's just trying to figure out, after an 80% jump in the stocks, a record quarter, how much of this drawdown have we yet not seen? I talked about Micron yesterday, hit the 50-day moving average and bounced up nicely. That's good. That means there's support levels there. We're not crashing through it. But I think the next couple weeks, as we're in that sort of transition period until we get to earnings, will be key until investors sort of figure out the numbers and what we hear.
And that does have an economic impact as well. I mentioned the wealth effect. Does the downdraft in these stocks, the downdraft in Bitcoin, which was a huge tailwind for a lot of people, how does that impact people's spending? And I think you are starting to see it show up. So it's not just the higher gasoline prices, the higher inflation that people are trying to cope with, but it's also the, my portfolio balance looks a little light.
Slimmer.